Kadena KDA has taken off as anticipated. And today, I'm going to show you how to become a risk-free, where it's going to become impossible for you to lose money if you've been following it, because this is textbook Elliott Wave and Fibonacci, and we pegged this weeks ago in advance with high probability. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. I used to only focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Now, Kadena, really important. We did this in advance on January 13th. We did a video down here. These are a lot of videos that we've done. I do a video day every day. And in the video on January 13th, what we said was we look like we're getting this textbook A, B, C correction. We had a price target, a time target, but the setup was really neat. But the action to take on Jan 13th was wait for the wave 5 momentum reversal, wait for it to unfold. So what that means is we want to be patient. We said we expect this one more leg to the downside, and the momentum was like this. We want to wait for the next bullish reversal and then look to enter. That's what we said on January 13th. Is worth a really good watch. And then what we said next, wave too low, buy or before January 28th. We had a time target as well. So we said, look, 2 weeks. Well, it's going to be before 2 weeks, more than likely. And this was the thesis. This is the potential of Kadena, 11x, 7x, two really clean, objective, mechanical, non-emotional targets. And then we did another video, and pretty much the update was, wait, we're close, but we're not there yet. And then the follow-up video, which was Kadena is looking ready for a 10x explosion with high probability. And then we did a really specific entry point. We said, now we've got this bullish reversal that we were anticipating and waiting for. And we got the first green bar, but we had really clear entry targets. And then what we said in our next video was we've been triggered. We've been triggered because the price triggered us. And what we're going to do now is do a follow-up. Because what's happened right now, boy, it is taken off, right? Our entry point was around $6, and now it's like moving very close to $10. So today is all about risk management. How do we leverage this information and get risk-free, money back in our pocket? So even if the worst case scenario, the market reverses and stops us out, we make money. And if it takes off, we make a lot of money. That's the secret, the art, and the science of trading like a pro. And one of the things that I cover in my Elliott Wave and Fibonacci course is how to do a wave 2 retracement. Really important. And it's how we did the Kadena. And what I cover in the lesson is this. Normally, markets moves in 5s and 3s, and when you have this wave 1, what typically follows is a wave 2, and there's these retracements. That's how we figured this out, right? And this lesson in the course that I got covers it in depth, and then we combine it with lesson 18 in the Fibonacci section, where I talk about retracements by the end of wave C targets. And when these two coincide, it is beautiful. So I'm going to encourage you to take my free Elliott Wave and Fibonacci Masterclass to see if this is suitable for you, because I have a phenomenal discount right now. My Elliott Wave and Fibonacci course, the Masterclass is free. It's in the link below. The course is $997, but we're doing an amazing offer right now. It's 90% off. It's £97 for the full Elliott Wave course and the Fibonacci, all combined in 3 to 5 minute lessons, and I'll break it down for you in layman's terms so you can see these patterns unfold, and it's exactly how we did what we did today. So what we're going to do next is we're going to do a follow-up, right? This is the thesis for Kadena based on the course, based on what I teach, based on what you'll find in the masterclass, is markets moves in 5s and 3s. And what we said in our previous videos, you can go back and watch them, 1, 2, 3, 4, 5 of a wave 1, and it looks like an A, B, C of a wave 2. And what we're anticipating is a wave 3. But what we're going to do today is what separates the amateurs from the pros and the pros from the amateurs is the following. Even though this is what we anticipate, and even though we've had this big bullish surge, this initial movement here, what we want to do is focus on risk-free. Risk-free. What do I mean by that? Well, it means we're going to focus on this area today. We're going to focus on this area. Why? Because rule number 1, never lose money. Rule number 2 is never forget rule number 1. Warren Buffett is the famous guy that says this. This is one of his famous quotes. We're going to focus on how we can do this in a practical fashion. So what we're going to do now is dive into a live chart, and I'm going to do some TA for you, but it's more around trade management. So let's dive into our live chart. So now we're into our live chart. And what we said in our thesis, in our plan, was the following. Let me get rid of this. We're going to pull up this. So this was what we anticipated in advance, just to kind of do a quick recap. Boom, boom. Here's the live chart. We did our first video around here, and then we did a follow-up here, and then said, let's wait patiently. We got triggered into the trade here. We put our stop loss over here, and now we're fast approaching our exit one target, which is our risk-free target. So even though we are really bullish, I'm bullish on this, really bullish, because the weekly momentum is bullish. If you haven't seen it, I'll just quickly show you now. Top left-hand corner is where I keep my weekly chart. This blue line has crossed over the red. So this tells me the probability of which direction the price is going to move over the next 6 to 8 weeks is sideways to up. And we can see this right now. But what we now want to be is we want to be defensive. We don't need to get overly aggressive. Here is how we mitigate the risk, manage our risk. So what we've had is what we anticipated. It's almost just exactly the textbook. We had this bullish reversal and we got triggered around here. We had the bearish reversal. I'm going to just make it a bit bigger here. And we can see that right now, the blue line and the red line are overbought. And we're about to get the next bearish reversal. So this is now where we become risk management is the name of the game right now. So it's going to be really simple today, right? So this is the entry. We've done this, right? What we're going to do is we've got two positions, right? I'm going to just draw a second line here. What we're going to do with our first stop loss, so both of our stop losses are down here, which basically says to us, I'm going to pull up this spreadsheet that I've got in my course. This is the numbers. This was the Kadena example. We said if you have a $30,000 account, the amount of risk is $900 for this position. And this was the entry conditions. And this is how we're going to manage our trade. I'm going to use this in a second. So what we're going to do is we're going to do two things. First, we're going to say, right, we want to be hyper aware that we are fast approaching the minimum expectation if we're wrong. And I covered this in the previous videos, minimum expectations. So what we're going to do now with one of our stop losses for half of our positions, for 50% of our tokens, is we're going to move it to a 1 bar low. So this candlestick here referred to as a 1 bar low. So this is the price. So we're going to do it on the spreadsheet so you can really see the numbers. So the low of this is $7.56. So when I pull up this spreadsheet, I've already put it in here. Exit one target, $7.56. But our stop loss of our entry point was $4.35. So now when we move our stop loss to a 1 bar low, what you're going to see is that we cannot lose money. What does that mean? Okay, within a few dollars, right? Within a few dollars. What we're saying here is, let me just pull this up like this. You see that the sun's just come out. What's the time right now? It's 8 a.m. UK time and the sun has just popped out and it's glaring in my face. But we're just going to deal with the sun. But I'm going to find what I'm looking for. There it is. Bang. We can see here the potential exit. If this condition was met, our first exit was triggered, which is a 1 bar low. And our initial stop loss is triggered, which is $4.35. We'll be pretty much break even. But we're going to do one step better. Hopefully it's making sense. If it's not, in my courses I cover it in a bit more depth. But in my last videos I covered this in a lot of depth. Is what we're saying. Let me draw it like this. I don't think I'm making myself clear. Even as I'm hearing myself, I'm like, Chicky, you're not making yourself clear. Okay, we got two stop losses here. Right? And we got two positions. Exit 1 and exit 2. So 100% of our tokens, let's just say we've got 10 tokens. Half is 5 and half is 5. Right? So we've got two positions. And what we're saying we're going to do is we're going to move half of our position to this point. To say if the price reverses on us and goes down, we're going to sell half of our tokens. So 5 out of 10 we're going to sell. And then the other 5 is still down here. But what we're going to do with the other 5 is we're going to move it to this swing low, right? Because there's no reason for us to keep our stop loss this far away from the market when we've got this very clear swing low, but we want to give the market room to move. But this, we don't need to risk it so much. So what we can do with our second position is move our stop loss to this swing low. So what's the low on this? It is $5.11. $5.11. So what we're going to do, we're going to type in $5.11. So what we're doing here effectively is managing our position in a business-like manner, objective, mechanical. And what we're saying now is we now have these two stop loss positions here and here. This line here was our entry. Let me just change the color of this. This is a bit clearer. No, that's not what I want. I want this one. Visibility, where is it? I want style. Yeah, here we go. Green. I want it green, and that should hopefully make it a little clearer that this was our entry point over here. I'm blinded, by the way. Right now, I'm looking into the sun and it's glaring in my face. All right, but I'm gonna see if I can still do this here. Um, we've got exit one, exit two, bam, bam. So that's it. That's it. So you've managed your risk. So what you've basically done here, which is very high level, simple, but not easy because of the emotions. We're basically saying if the market does this, this will be exited at a profit. This at a smaller loss than what it would have been over here. So then the total P&L for this position, worst case scenario right now, is we make 1%. We make 1%. We're wrong, but we make money, which means we're fit and healthy to fight another day. So what you want to be able to do is when you're wrong, is to make either break even, small profit, or take a small loss. However, this is the real exciting part. When we zoom out like this, what we're effectively saying, this is what I anticipate will happen. Kadena is more than likely going to have another update. And then we move our stop loss here. Bang. And it might have another update. And these are just candles, 1 day movements. And we just move our stop loss there. And then eventually it'll probably do this, right? Bang. Right. And then we're risk free. And we do one of two things. We either manage, based on your trading plan, we manage our trade by keeping it on this swing low, or mechanically just move it to break even in terms of move the second position to entry point. So let's just say we did that. So now what we're going to do is here, this point is, what is it, $9.33. For the first position, $9.33. Let's say that get exited. And then we move the second position to break even, which was our entry point. So what this tells us now, worst case scenario is we make 3%. Worst case scenario. But what we're now doing is now it's going to be easier for us to tolerate the longer term move and the longer term trend. That's what we're really doing. So now you've done the hardest part. What we just did there is hardest part. Most people don't do what we just showed you there. Now it's going to become much easier to then give Kadena breathing space to allow it to do this move. And only when, if and when it hits the $43 to $67 mark, then we can manage our second position. But right now, we're just looking for this massive swing lows, and then we can manage our position. So today was simple. All we did in managing our position, simple but not easy, because most people just don't have the discipline to do what we just did, is moving our first stop loss to the 1 bar low over here and moving our second stop loss. So half of our position will be here and half will be over here. And now we can just stand back. We're still actively 100% in the trade, in the position, but we are now risk-free. So important. We also, I just want to quickly show you this because we covered it in one of the videos. We also did an example of how to use CoinGecko. So CoinGecko looks like this. What we said was we had 30,000 in our portfolio of Tether USDT. We used, if we go back to the spreadsheet, we used 3,258, 2,358 to buy our position in Kadena. So if I now just click on this arrow down here, this will break the Kadena position down for us. And it tells us, it says Kadena is currently $8.91. Earlier it was $9.90. So it's kind of fluctuating in that price zone. The position itself is up $1,500. We are risking $900 right now, but we're giving it breathing space. And we wrote our notes in advance. We said entry 1 bar high, exit at 50%, which is in the region of $10.72. Now we're approaching that region. Our second exit target is $44. Our stop loss is at the entry point of $4.35. So, and our risk is 3%. So what we can do now is we can click edit. We can scroll down to the notes section and we can add to these notes. We can now say, moved stop loss 1, stop loss 1 to 1 bar low, and stop loss 2 to swing low. So you can basically, you're now managing your trades. As I click submit, you're just going to update those notes, and as it updates, bam, we've got these notes over here. So now it's very easy and mechanical for you to see your position is running in a profit. We are now risk free. You can add that note in as well. Actually, I like to add that note in, but I'm just doing it live for you here. Is we are going here. Boom, 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 boom. Let's just go back here, and we're gonna go here. Bang, risk free, and I would also put in the date. Today is the 8th of Feb. And the reason I'm showing you this is this is like your 24/7 executive assistant. There's the price alert as well at the $10.72 mark. But we're also watching the trade. And sometimes if the momentum reversal happens earlier, then you just do the move earlier and there you go. So Kadena is shooting off. It's 50% up since our entry point. We entered at $6. It's now $9.90 or $9 in that range. But there's no more action. We just now put our stop loss to the 1 bar low, high probability. So we're maximizing our gains. And then we're also mitigating our risk on our second position as well. So there's no more work to be done. No more work other than tomorrow, if there's a new 1 bar high, you just literally move the stop loss. And then if there's the next 1 bar high, you move the stop loss. And then we're trying to capture as much as we can on this minimum expectation. And then for the second position, we're standing back, giving it loads of room to potentially move into a 5-way sequence. So if you like today's video, like, subscribe, hit the bell notification, take my free Elliott Wave Fibonacci Masterclass. If you like it, buy the course. It's £97. You get an invite to my private Telegram group. We do workshops on the weekend. There's other things that we're looking to put into play as well. But the main thing is that you get the advantage of reading the markets like a pro, so you can project in advance exactly as we've done in the last 4 videos. Wait patiently for the high probability setups because we only can do probabilities and never certainties. All right, let's finish on a quote. So today's quote is, actually I read this one yesterday. Shall I read the same one? No, let's just loop Warren Buffett, right? Because we said it today. Rule number 1, never lose money. Rule number 2, never forget rule number 1. But what we did today was the practical guide. Oh, look, the sun is glazing in my face. Oh, my Lord. Oh, my Lord. It's like it's taking over right now. Can you believe it? It's London weather. London weather. You can even see, look, I got a ring light in the background. Look, and then the sun. Normally I cover the windows, but the sun just popped out. Right. But normally today, what we've done is the practical guide of how to mitigate and minimize losses. So important. So like, subscribe, hit the bell notification, and I'll see you very soon.